Wednesday, December 13th, market analysis, Stan Ehrlich. Well, we're setting ourselves up for whopping bearish engulfing ER sell signal if the indexes can get below yesterday's lows. In the next few days, a bearish engulfing would work. Today, we already have higher highs in a resistance area for the E-mini. March futures contract you're looking at. And it needs to drop below yesterday's lows. Now, we all know FOMC in an hour may cause that to happen, which would be great because, as you know, I'm expecting a dip down for about a week now into just before Christmas, which is on Monday, a week and a half from now. So a 1 week break back to support 4,600 and very possibly down to around 4,470-ish is expected. Overbought, oversold, overbought conditions in resistance. We know that a piece of news is going to come out that the market's been kind of waiting for and very optimistic about its result. It's supposed to be friendly or bullish, but markets move on anticipation and reverse on realization. One of my old-time favorites. Markets move in anticipation and then reverse on the realization very frequently. Next chart is a new high ground for the S&P 500 since the beginning of the bear market of 2022, and very rarefied air. In fact, it is new highs since April of 22, not January, but April. But still overbought. Can't help it. Any moment. Next, in about 1 hour from now or so, the spider 1 minute has started to slip a little bit, but nowhere near enough slippage. Still higher on the day by a very small 20 cents. DIA is almost unchanged at 7 ticks higher, and the Qs are up a modest 40 cents, very small amounts in general. So during my YouTube, we could turn red in all three, which is kind of the start. You're going to have to in the first place in order to get below yesterday's lows, which is not very close by. Next, we've got the DIA, new high ground since the previous top on, was that January 5th, 4th, when we had the bearish engulfing ER sell signal on the high day. So we're right there again. Overbought. Can't help it. There's perfect setup for a big signal and a nice break into Christmas. The Russell 2000, I've got the 1 minute chart here, gave us a sell signal and it didn't work. It gave us a second sell signal you'll see on the daily charts in a moment, and we're off and running with a darn good profit. Sold early, almost the rally high in the first minute or two of trading, and now low and last, doing outstanding at the moment. The Russell 2000 daily data chart shows yesterday's bearish engulfing ER sell signal, and the rally high this morning not only allowed us to get short at a little bit higher than the signal price, but also it had a smaller risk, therefore, and it came super close to getting stopped out, but did not get stopped out. So far, this looks great. The 2000, I'd love to see it close below yesterday's lows. And of course, down faster, quicker, better, period. QQQ. Daily data chart, overbought, right close to the previous tops again, basically the beginning of the bear market of 2022. Next, NASDAQ futures contract in new high ground yesterday and today, but left a gap behind. That's one thing. Overbought, second thing. So we could turn down. Next, March futures contract, 1 minute chart. And well, all I can say is I'd like to see new lows as soon as it can make them, if it can. Even the bullish news might produce a high tomorrow if markets pop up for the last gasp of strength, but I don't think that's going to happen. I think all of a sudden it's going to be neutral to maybe a little bit bullish, and then disappointingly maybe, and down we go. Or if it's bearish, whoop, yep, that's going to cause probably the beginning of this break I've been talking about for, well, weeks. Next, NASDAQ, 1 minute. I'm going to go to the futures charts. Here we go. E-mini, a little bit different perspective, right around the tops, overbought, looking for a move down, as I may have mentioned before, 4,460-ish. And there's a chance it could hold a lot higher, 4,590 or 4,600. But that seems to be easily reached. And I'm voting for the other support level, 4,460-ish. Next chart, NASDAQ daily data continuation contract, new highs since the beginning of the bear market of 2022. Broke out of this wedge formation, a little bit unusual. There was a false downside breakout and oversold conditions, and it just simply roared right back after the low that was made on October 26th, the October lows. So, wow, they've worked extremely well this year. Maybe not as good as last year, but heck, only a month is come and gone and stuff. That was the October low last year, October 13th, the bottom of most indexes to the day in October. That's why I told you about October lows this year. I didn't expect it to be this good this fast. But hey, who's complaining? Next, bonds. Coming up yesterday a little bit more today. It's reached some resistance areas, did get overbought and fiddling around now. Our previous long position got punched out of the trade around the low 2 days ago, but it was a heck of a good trade. We're in the trade on an ER3 at approximately 109, a little bit below, and out at 18 and change. So next, 10-year notes, we're still in the long position. We have not hit the yellow STS stop. That's smart trailing stop. It is not a percentage or an amount dollar-wise from the highest rally high, although part of the calculation is due to those numbers. It's also due to other accelerants. The head and shoulder bottom is not failing us so far. I'm forecasting a minimum upside move to 112.23, 30 seconds, or more because of the pattern, which broke out, started its move really on November 28th. And prior to that, it was building the last shoulder and the head and the shoulder. By the way, we got a buy signal at the head of the formation, almost the lowest low to the tick. Great trade so far. Next chart, crude oil. Now oversold again, still in that same support area and trying to reverse. I doubt that we're going to get above yesterday's high, but if we did all of a sudden, well, it turned green and we get a whopping good buy signal, I would hope. Next, natural gas. Kind of the same story. Left a couple of gaps to close, right? Well, one anyway, right there. If we do turn around, I think we're going to. It is going to be from very, very low RSI numbers of 7 and change, the lowest for many months, and a fairly rare occurrence. So the rally could be, should be, I've seen them happen, pretty sizable. And I'm looking for a rally up to resistance at 3.07. Next, heating oil. Oversold, bouncing off a little support level I've had in there for a very long time. And bear move, bear trend. Probably the rally won't go very far. Next, gold. I can't believe that since we've gotten that sell signal on December 4th, I screamed bloody murder about, we've only had one up day, and in silver, no up days since the same date. Reversal, signal, ER, red. And now it's already gotten down to my basically first downside objective, and it's gotten oversold, and we're about to see a rally. This is Wednesday, so maybe the next couple of days. Where? At least probably up to 23.6 and maybe a bit higher than that. But this resistance area is very profound, and these support areas are also important. So we might be getting between a rock and a hard spot. Next, platinum. Really don't have too much to say here. Obviously, supports held this last break last week, and we've rallied a little bit since then, but pretty feeble so far. Not too much going on. Next, high-grade copper, same kind of story. Rock and a hard spot, didn't quite get to resistance last time, didn't quite get to support, and went back up into the middle. And now we're kind of, I don't know. Next, soybeans. We got the bottom of the break last week with Thursday. Friday, we got in ER3 also, ER1 and ER3. For a day and a fraction, it was a pretty good move. Nothing spectacular, but now we're all the way back down to the original entry price. This is not good whatsoever. I should turn on the strategy for you guys tomorrow. I probably will, and we most likely than not will be out during today with some minor profits. Next, soybean oil, big short sale, long-term trade it turned out to be, and we are flat at the moment, and the market is a little bit below where we offset on November 14th. So far, support's held. Here we are again, but we're nowhere near oversold. This looks like it's going to start to make new lows. And the last bottom was 40, we'll call it 48. It's a hair below 48. And we're at 9.80 right now, so $1.80. That's what's going to happen, I think. And then after that low is broken on a closing basis, we could work all the way back down to 41. Next, meal. Support's being tested at today's low, and it is bounced okay. Nothing major. Close to oversold, not really. Can't tell if this is going to hold or not. Looks like it has a good chance. I won't go much further than that. Next, we bought the bottom of the move on corn a couple of weeks ago. You know it. I said it at the time. Our STS has moved up, and finally, we're getting stopped out of our one long position exit, 1LPX. Had a good trade, wasn't great. We're flat. Market's currently trading under the stop where it was. And at the moment, this is a new low close probably for, well, since we got in the trade. Corn is in a bear trend. Remember, I never did expect a lot out of it. To begin with, I said those things. We're going to make new lows, and it's going to keep on sinking. I am not quite sure how much, but it could be a chunk, because look at what we have left here. Just a moment. Rescale. Good. Oh. Okay. Remember, this is continuation contract data, so it's not actual futures prices, but close to the average of the nearby two contracts. So maybe another $1. Yep. Okay, wheat. Same kind of commentary. Resistance stopped the rally when we were overbought, turned down. This is the new low close for about a week and a half now, where it's going to make new lows, and it's going to get oversold again and bounce again, probably from something in the 525 range, maybe under that. Next, cattle did get oversold, close to support, not quite. Has had a rally, but has been doing this stair-stepping thing, amazingly similar price action. One would love to call them Elliott waves for a variety of reasons, but anyway, came down, almost got oversold, rallied to resistance, got oversold, rallied up to resistance, got oversold, rallied up to resistance, got over to broken record, rallied up to resistance, and it just did it again. What can I say? oversold again, another week or so, I guess. Coming into the oversold zone officially, I guess. And another bounce. Why not? Next chart. Live hogs. I'm not very impressed with support holding in here. This looks like it's going to start to make new lows again. We're not that close to oversold. We're very close to new lows and or new low closes as well. And the next stopping point after getting below 65.73 would be probably in the high 50s. Next, OJ. Okay, brand new stuff here. Head and shoulder top again, ladies and gentlemen. This time I will put the arch marks on. I did a delayed doing this. Okay, sorry, gotta get drawing and then go up to the arch mark, and that's fine. And across this high, you've got yourself a shoulder, in my opinion. And just a moment, duplicating this and grabbing it. I hope. I think I've got to spread it out a little bit. That's fine. And grabbing it. That's the head of the formation, absolutely. And duplicating this. If I can see the bottom of it, and I can't, so I have to drop it down a little. Okay. And going over, come on, don't give me a problem. There you go, over here for the first shoulder high. So that's it. Neckline is drawn across the lowest low after the first shoulder, but before the head. The neckline is drawn off the second pivot point at the lowest low after the head of the formation, but before the last shoulder high, which was a bearish engulfing yesterday, not an official sell signal, which would have made all three parts of the head and shoulder top have my reversal, but it's just missing the overbought condition, which is not uncommon on a last shoulder on a head and shoulder top because there isn't usually that big a rally anyway. That's a big move up to make the first shoulder. And this one's decent enough typically to get overbought, but not typically the last shoulder. We're dropping below the neckline as we speak. This is a potential downside breakout if we close here or lower. The lower it goes, the better it is on the downside breakout day because it's usually got the high volume and sometimes gaps across the line. And it's a very big down day in general. So we're on our way to something just like that. There should be more stops a little bit lower. We could actually reach the first support level, 343, like today or tomorrow. And that would be maybe Friday. Today's Wednesday. So here we go. Closing above the neckline would be a false breakout, and we'd have to wait to see what happened next. It might go up a little for a day or two and then crash. Next chart. Oh, and the minimum downside objective, I didn't do it, and I'll do it for you right this moment. Pardon me. New parallel trend line, but I'm going to take the end of it and put it at the top of the bearish engulfing high day on the market. And the bottom of the trend line, I'm going to chop off the bottom, is going to be directly below it, but at the neckline, and kill the extension. There is what's called the depth of the formation. You grab that and you drop the line just immediately below the breakout point, which we're assuming is today. So a little higher, that's it. 287.11, give or take a little, is the downside objective. If we have the breakout today and everything works correctly. Next chart, Coco. Don't know. Bull trend, not overbought yet. Could pop in a new high ground again. Wouldn't be surprised to see 4,400. That's exactly what it's been doing, off and on and off and on and off and on and on. That's it. That's all I got. Next, coffee broke through resistance and is sitting at the top of the resistance area. Closing here is kind of ambiguous. Closing below where it is right now is back under a previous rally high and a divergence price-wise because you got a new high in price, but not on the indicator, which is so close to being overbought, not quite. I think it's trying to turn down. This would be a good spot for it to just keel over and start to slip in the next couple of days. Anything stronger than where we are right now is kind of a different situation. Next chart. Sugar. Oversold. Looks like a new low close. Not quite a new low. Well below support, but fiddling around a previous low that was way back in June, which is a support low, not a zone. We'll see what happens. This could be actually turning around, although it doesn't really look like it at the moment. I expect a rally soon. Oversold conditions pretty significant. Okay, and cotton rag, rocking a hard spot, bounced off support. Maybe it'll go back up to 88, 89 area again. Wouldn't be a darn bit surprised. Just fiddling around at the moment. Next chart is back to the E-mini, which is now, ladies and gentlemen, only 13 ticks higher on the spider, 19 ticks higher in the DIA, and 34 ticks higher in the QQQ. And I'll show you one more time, it's important. If in a little less than half an hour, the Fed comes out and does some things that the market does not like, whatever that is, and remember, an awful lot of bullishness is built in advance. We're overbought and not holding very well. In fact, we've been making minor new lows for the day on the Qs. The DIA seems to be a no man's land on the real-time 1 minute chart right here. No new low, not near the high, kind of the middle of the range, but overbought for days and days and weeks. Okay, the spider has not had a new high for a while and is starting to eat away at the lows, making minor a few minutes ago. So that is beginning to show a minor signs of weakening, but nothing is net lower for the day, just incredibly close. And the Russell is low and last. There is our equity plot on a 1 minute chart on the Russell 2000, our new short sale just after the opening because of yesterday's bearish engulfing on a closing basis signal. And you take a look at the daily chart again, there it is right there. Yesterday's red bearish engulfing on the Russell 2000. The rally close, super close to yesterday's high, but not stopping us out. And going back to the detailed 1 minute chart, we are surviving so far very nicely. Wow, low and last, dropping very quickly. I get the distinct impression this could even make new lows for days. That would be great. All right. Have a great trading day. Profitable trading to you.